Hi, everyone. Money Show is delighted to welcome back Mr. David Smith, a senior analyst for themorganreport.com and co-author of Second Chance, How to Make and Keep Big Money from the Coming Gold and Silver Shockwave. Today, he is discussing how to make winning bets on silver, gold, copper, uranium, and altcoin miners. David, we look forward to your insights. The floor is yours.
All right, I'm looking forward to this, and hopefully we'll have actionable advice for everyone listening. This is putting together a situation where the tail does not wag the dog. In other words, the subset sectors that we have representation in copper, uranium, and altcoin miners, and even gold, does not detract from what, at least in my view, should be a primary focus, which is silver and silver miners. And I say this because of all the metals on the board, silver by any objective measurement is undervalued in relation to any of them. No one alive today knows what the value of silver is. We all know the price, but I would suggest that the price and the value are massively distorted from each other. And at some point, the market, probably pretty soon, is going to start figuring that out and launch us onto a bull run that will take silver into 3 digits. And because we're in a secular commodity run as well, take all these other subsectors along with it for their own reasons, some of which are similar to silver, some of which are different. Here's a little disclaimer. Looking over my shoulder, I'm not giving financial advice. One thing I'd like to mention before we start is that there's going to be a very exciting show September 27th and 28th at Coeur d'Alene, Idaho at the Coeur d'Alene Resort. It'll be an outgrowth of the Silver Summit that David Morgan helped put together initially and has run for a number of years, first in Coeur d'Alene, then in Spokane, and 3 years before the year before COVID, it was run by Cambridge House in San Francisco. And this is taking, I think, the idea to the next level. It's going to be very exciting, and I hope that people can make it there. COVID notwithstanding, it's going to be really something. David Morgan and I will be presenting there, as well as listening to the dozens of companies that will be slotted to show up. When you're trading in the environment that we're in, or any kind of an environment really, you cannot afford to lose your speculative funds, and you can't afford to lose what I call psychological capital. If you become so emotionally distraught that you can't trade properly, it doesn't matter if you have millions in your account, you're going to fritter them away or become frozen and not do any trading or make trades at the wrong time. So it's really important to prepare ahead. And I follow the SAS motto, who dares and prepares wins. I put the and prepares in there. And that's implicit in being able to dare, because you don't want to dare without preparation. The key on this is the right mix of metals. Now, my assumption is that not just going with silver and gold mining shares, or even physical, which is what you should have first, alone, you can maximize your gains and keep from getting knocked out of the market when silver swoons like it has been lately, in gold, which we've been in sideways trading action for over a year. A lot of people have become disheartened. Some have dropped out. Some have not added into weakness, which is what they should have done, even though they had the money to do it because they hadn't approached it this way. But my view is that if you have a few really good copper shares, a few really good uranium shares, and some participation in the blockchain revolution by having a few blockchain type companies, that they're all going to be working at slightly different times. And so lately, my shares have been declining, that I've held even my best of miners, just like you that hold shares as well too. However, I've had some pretty good gains in block share type stocks. And for a while, when silver was quiet, copper was really moving. And the uranium had a tremendous run last fall, which is really getting started on its bull run. So having something going up at one time that you have doesn't make you feel like you're kind of alone in the corner. You've got something that's going your way while you're waiting for maybe the bigger picture for you in terms of silver, which it is for me, to really catch traction. Don't be afraid to sell higher, or to buy back higher than you sold. I've made that mistake a few times. I still do it occasionally, where I'll sell a chunk that I've kind of take a profit on, and then I realize I shouldn't have sold anything, or I should have kept some of it in, and I go back in. And if you're afraid to buy higher, you won't ever get in there at all, and you'll either lose your position permanently, or keep it smaller than it should be. But you have to admit, I made a mistake and go back in sometimes after you've thought about it. The basic thing when you have what you think is a good position is just hold on to the darn thing until you think the secular run is pretty much the being over. Don't worry when we get these impulse legs where the market is overbought. The Dow stayed overbought for 5 years. So don't worry if you hear when silver and gold finally break out to the upside, which they're getting ready to do now over the next few weeks, I believe. You're going to hear, oh, that's overbought. Well, don't just start dumping shares because of that, because the market can stay overbought for quite a while. Look at other things to confirm what you think. And don't wait for the market to move to $30 silver before you do something. By then, everybody else has seen it. David Morgan recommends, and this is important, and it's the idea, the right idea. Get your silver first. It serves as insurance first, profit second. And if the metals go where we think they're going to go, you're going to make quite a bit of money on your physical as well as your miners. But get some of that first, and you'll have to pay a little more for it now with the premiums, but it'll look really good in a short period of time, I believe, compared to what is going to be transpiring down the line and what happened last year, for example. One of the reasons that I personally don't talk too much about the subset metals in the EV space is because some of these are really prone to being replaced by something else, either used less of or maybe eliminated entirely. And I think in the case of silver and copper and probably nickel to a large extent, this is not too much of a worry. But when you start talking about cobalt and even lithium, which is the big kid on the block now for making these batteries, as you know, lithium is prone to catching on fire and exploding in different applications, whether it's a cell phone or a car or whatever. And I think that it's real possible that there'll be a battery that will supersede lithium at some point. That doesn't mean don't have any lithium now, but don't go all in on it, because there are other batteries out there that are being tested, one of which includes silver, that may either replace or take a big chunk of the lithium market. So be really careful. And even in terms of uranium, which could actually make this a shorter bull market, might end before the end of the decade, are thorium reactors. Now, the only one I'm aware of is in China that's scheduled to be built and operable by about 2030. And if that concept builds out over the next 5 or 6 years, that could have an impact on uranium. It's not going to have an iota of impact right now, but keep it in mind for later down the line. And so this is what I call substitution risk. And I believe this should be a part of your strategic thinking for your own portfolio. Everything flows these days from environmental and social governance. It's how we treat the environment, the people around us, the carbon footprint we have, what the footprint is for the mining sector in terms of exploration and production. And every company has, and it's on their radar now, and you as an investor have to have this as part of your radar. Ask yourself, how effective is ESG being conducted by the company that I'm looking at? And this is a monster concept. It's not going away. And those who do not pretend to pay attention to it and factor it in at the very beginning of their planning can have a situation where their project doesn't go anywhere. I'd like to suggest that you do some research on your own on this. This is the Newfoundland area gold play, and it's one of the most exciting things I've run across in the sector. And I'll tell you right up front, as a disclaimer, I hold shares in several of these stocks. There are probably 3 dozen companies in Newfoundland, some of which are probably not going to amount to much of anything, but a number of which potentially will, even if they haven't right now. And some have really had some pretty amazing results. So if you'd like to do some research on this, it doesn't have to start with my free report here, but just Google Newfoundland area gold play, and you'll find a lot of information about it, and companies talking about their value proposition on YouTube and elsewhere. And you can get a free report that I wrote gratis. I wasn't paid for it, to the Prospector Resource Investments News by going to the morganreport.com/my-free-reports. I'll mention another one in this talk. There are actually 5 reports over there, and you can go over, give your name and email, and get all 5 of them if you want for free. I think you'll benefit from reading them. It'll help inform you if you're interested in these topics. It's a very exciting play. Some of the results by Newfound Gold and others are just off the charts. I mean, this is an environment where there are companies in the world that are making some money doing a half of a gram or a gram of gold. And here we're talking about, in some cases, ounces of gold, very near the surface, with long strike lengths and wide veins. So it's really something to watch and see how it might build out. And you can also look at Eric Sprott, who's got probably tens of millions, if not more, invested in this sector, this particular part of the sector. And if you Google Newfound Gold Eric Sprott, you'll see some information on that. And I believe that there are half a dozen companies that are real contenders now. Some of these other companies can come out of nowhere with a discovery, but it's going to be exciting for some years to come. And I liken it to the energy that's building, the buildup during the Klondike gold rush in the last century. Pretty exciting thing. Inflation, I don't believe is transitory, according to the Fed. I don't believe that. I think it's going to be with us for a long time. I think the stagflation of the 1970s will be the closest model that we'll see, except there will be some new elements. And the old elements that were present in the 1970s have been magnified in importance, and it will push us into a very high inflationary environment. Last month, the producer price index was up 6.8%, which is a huge figure compared to the 1 to 2% we've seen in recent years. So do not buy into the idea that inflation is going to go away soon and there'll be deflation. There will be deflation in certain sectors, but I believe the overriding theme, due to COVID, due to supply disruption, due to supply demand imbalances in copper, silver, nickel, and other products, means that we're going to see high prices for all of these items and the things that they are built with going forward for at least the next several years. And we have crop issues. I mean, this is really the perfect storm. You know, about 20% of the Brazilian coffee crop was wiped out several weeks ago to the coldest temperature on record that froze about 20 to 25% of the crop. We're going to see more of things like this that are going to come out of the woodwork. And you can see how agricultural prices have broken out of a very long descending triangle, which is very bullish. It means this thing is not going to be contained anytime soon. So plan on inflation. Silver, as you can see on this chart, is the lowest item that has not, is the only item that has not achieved new all-time highs, nominal highs of all the things here on the board. $50 high was achieved by silver twice, once in 1980, once in 2011, just under 50. And that means to me and to many others that are paying attention here is that price and value are grossly distorted for a metal that is absolutely critical for modern life. And when that cork pops, it's going to be an explosion. It's going to be pretty massive. And you better be a little early rather than one day late, or you're going to become a spectator rather than a speculator. I believe it even has a greater asymmetric value proposition than Bitcoin, which I still think has a lot of upside potential. So learn to fish. Don't just try to copy success magnets, buy what they buy or what they're in. Ask yourself, how do they think? And you can read another article that I wrote for the Prospector News called Best of Breed Geos, 4 Best. There are probably 8 that I would put in that category, but I could only fit 4 into the 2 pages. And I chose what I think are first among equals. Learn how they think, which is what I've spent a lot of time doing. I think it will help your trading success. And you can get this free report at the where I mentioned earlier. David Morgan and I co-authored this book, Second Chance. It's been selling very, very well throughout even the downturn that we had after 2016 when it first came out. And we've updated information on it in our David's monthly talk for subscribers to the Morgan Report, and also his free weekly letter that we'll talk about a little bit later here. So this will help you not only make good money, big money in the markets, but get out with most of it. Nobody else that we've run across has a plan for getting out in a way that works with human nature and human emotions. You do not want to ride this thing all the way up and all the way down, which is what many, if not most people will do, either by getting in too late or by holding on way, way too long. Once you get your plan put together and you get ready to act on it, you want to think only of the cut, which is Sword Saint Miyamoto Musashi said. He's the most famous swordsman in Japanese history. When he decided to make a move, There was nothing else in his world except for that move that had been decided upon beforehand with his years of training. No second guessing, no emotionalism, calm, just like the water in this picture that I took of a bay a couple of years ago, which was just stunning if you think about it. In the foreground, you can see the actual rocks and gravel, and you can see the bay there with the sky perfectly reflected in the water itself and the boat haven in the far distance. Misu no kokoro is Japanese for mind like water. That's what you want to work toward as you get ready in your trading, so that you're going to be emotional, but try to be less emotional than everybody else, so that you don't get carried away by your emotions, and you plan your work ahead of time and then work your plan in the market. Copper and silver share a couple of things. They are finding decreasing grades, less big discoveries, longer development times, more complex times, resource nationalism, where some of the countries where a lot of these deposits could be found or are being found are raising taxes, raising requirements, making it more difficult to build a project. And this is going to go on through the 2020s, and it's going to be a huge factor in how fast and how far these prices go, because of the demand for them. And you notice this OU Tolgoi isn't going to start for another 7 years. It's a massive discovery, but it's not going to be going anytime soon. Ivanhoe is kind of an outlier. It's got some of the highest grade copper in the world. They're starting to produce either very soon or now, but they're in areas of South Africa and in the DRC, the Democratic Republic of Congo, that are difficult to work in. But if anybody can pull that off, Robert Friedland will be the person to do that. But you can see how few discoveries have been found, and very few in North America. We have profiled one particular one in North America, which is an exploration company which David Morgan and I visited a couple of months ago in Montana, and it's JV'd with Rio Tinto, one of the world's largest resource sector companies. We think it's going to be a big winner that's going to keep winning for quite a long time. Look at here how the grades of silver have decreased over the last decade. All the big miners are digging more rocks and ore out of the ground to get less silver, and to try to get the same amount, they have to dig more and more out of the ground. This is not conducive for supply keeping up with demand. And as you can see here, what I call the Asian silver demand vacuum cleaner just keeps sucking it up, adding more and more silver, bringing it in. I can remember at the beginning of this bull market before 2010, I believe, if I can remember correctly, that China was exporting 100 million ounces of silver a year, exporting, sending it out of the country. I do not believe that a single ounce of silver leaves the country now that's produced in China. The same thing with their gold. They've become the world's largest, I think last year they became the world's largest gold producer. It all stays in China. So what's produced in China in gold and silver stays in China. This is a huge development which has transpired over the last decade and continues as we speak today. This is the thing, most silver miners in the world, most silver comes from as a byproduct of base metal. And so the 25 or 30% of the silver that comes from primary silver miners, of which there are just a couple dozen, they can't ramp up their production very quickly when the demand increases, which it is now, both starting to do it for industrial and also on the demand side for investment particularly. And so the base metal people can only produce so much base metal and get so much silver, and the primary silver miners can't ramp up their demand that quickly. So that's why you have the big crush between supply and demand in silver, and it's that way to a large extent with copper as well. Here's some silver gold ratios, what we could be looking at in the future. I mean, the normal ratio, as you can see here, over many years runs from about 40 to about 75 or 80. I mean, if you drew a line, a horizontal line across those two, that's what you'd see as quote normal. And you see the abnormal shoots down to 15 to 1, which happened in 1980. And then we saw another one in 2011 at 30 to 1. And now it's about 90 to 1. Okay, let's say you just say 50 or 60 to 1. Look what happens. 60 to 1 with $10,000 gold, which we think is eminently achievable in the next few years. Jim Rickards calls for $16,000 gold. At $10,000 gold, you'd see 166 per ounce silver. At 40 to 1, 250. So we believe that silver is going into 3 digits, and it could go well into 3 digits. We just don't know. As I said before, everybody knows the price of silver. Nobody knows its value, and that's including us. We're going to find out. Mr. Market is going to let us know over the next short period of time, in months and the next couple of years. We're going to have a darn good indication, I believe. $30 to $49 silver, I call volcanic tremors in the market. There'll be selling in tranches, going up into that $50 range as we work up that way, either starting that way later this year, which we think could hit 30 this year, and very well, almost certainly, we believe could hit 50 or higher next year. Once it breaks above 50 and forms a strong base, that's when you're going to see a pyroclastic eruption where it could jump $25 or $30 in a matter of weeks or months, something we've never seen before, but it's going to be quite the ride. And you can imagine what that'll do to the price of silver physically, the ability to get it, to the premiums, and to the prices of silver miners, especially primary silver miners. You can see what Jeff Clark has shown here, and you can see down where it says gain 117%. This is where we are now, and this is where the last bull market that was really a monster went, and we think it can go a lot higher than that percentage-wise. So keep that in mind. You're not too late. Gold stock versus gold itself has been undervalued. The stocks for many years are at historically low levels. They're going to keep on closing that gap, making the work that you do even more beneficial in relationship to how fast gold goes up. There's also another gap that most people don't realize between the majors and the miners. That normally is a lot smaller than you see here. So if you get a good junior, it's going to appreciate faster than a good senior, and you can make even more money there. So that's how you can really tickle your returns even better by being selective. Look how long it's gone on. And the old timers say the bigger the base, the greater the upside case. So this is the way it's going to go. And it means it's going to last longer and be sharper, because it hasn't just been a tiny little spike as you've seen on a couple of these other red lines over the years. David Morgan has always said that as much as 90% of the profit potential comes during the last 10% of the time of the bull run. So don't sell out too soon, and be very careful about getting rid of everything too soon. You don't want to wait till too late, but you also don't want to jump too soon, which a lot of people will be doing. There'll be a lot of people that have held for years that will have almost no silver by the time it gets to $50 or 55 or 60. And if it goes to 100 or 150, as we think is very possible, they could be sitting there with little or nothing because they got out too soon. It's hard to stay in for all of us, but just keep that in mind. And then at the end, when you think it's over, there's going to be another situation where prices could double again in just 9 months. And this has happened a number of times before. So keep this in the back of your mind for a few years down the line. Here's another free report I mentioned, the 4 best of breed mining geos, and you can find that here at the bottom on this link. The uranium campaign that we put together it's a secondary campaign. Some people make it a primary one, but I just want to have a few good miners, metal miners, and that's what I focus on. I don't intend to be around till the end of it. I want to get out too soon during the boom and avoid what Marion Katusa calls the echo, where it's a lot harder to earn money, even though it's still in the bull run. Here's the bull market that's getting started. The Sprott, what's called SPUT, S-P-U-T, I believe will be the new ticker symbol, which buys uranium on the spot market, started trading last week. It's already raised the price of spot uranium by $2 a pound. Really watch this. We're getting ready, I think, for an explosive move in uranium. ISR may make that a shorter one of maybe, say, 3 to 5 years instead of 10. We'll see. Bitcoin is not better than gold. It's not worse than gold, but it's different. And I believe that Bitcoin and gold are partners. They don't have to exclude one another. It's very possible that blockchain and Bitcoin will dampen the ultimate price rise of gold, but it will not eliminate it, as some people are saying, they'll both find a way to coexist going forward at much higher levels. If somebody, when these prices have their sharp drops, the people that are talking about it really get chewed on, but that goes with the territory. We have talked about, and we did an article a year ago about BlockFi, which has, you could take dollars and put it to an account into their stable coin. You can even either keep it in stable coin, which is 1-to-1 to the dollar, or you can buy Bitcoin or Ethereum with it. Last week, I got my own BlockFi Visa card, which I'm holding here, and I can buy anything with Visa. I've been buying everything with it for the last week, and for the first 90 days, I get 3.5% Bitcoin as a reward for my purchases. So that's pretty darn exciting. Take a look at that. We have 2.5 billion people, unbanked people in the world. They're not ever going to be in a bank. They're using their cell phones now. And the DeFi, it's called decentralized finance, is changing and will change everything in our financial world. And one of the things, there have been about 60 or 70 projects, most of which are moribund now or have fallen out altogether, that they're trying to do something by digitalizing metal, sometimes just as storage, sometimes as a monetary system, which is what the Load Project is doing. David Morgan and I have been involved with it for 4 years, since almost the beginning. We've written about it. We hold our funds in it. Many of the Morgan Report readers hold funds in it, and we think it's going to transfer and transform and give another opportunity for holding silver and gold backed digital coins, which you can hold physical silver, you can spend it, you can hold it to speculate on it in one of 7 or 8 vaults around the world that are insured in a way that is comparable to holding physical silver, with all the advantages and none of the disadvantage. Take a look at this, go to ag.load.one, and you will see all about it. There's a questions and answer there, there's chat room and all that. Take a look, we think you'll be impressed. And they just started trading recently on an exchange. They're working on another one. So just add one more value added concept to the concept. There's so much material that we all have to look at during the time that we're out there. There's only so many hours in the day, and I'm doing this stuff day and night. And what I have found a way to not lose ideas that I might like to take a look at. If I'm looking at something, for example, here, the Eagles interview, let's say I'm watching this on YouTube. I see over here Andy Sheckman talking about silver. What I can do is either send myself an email about that if I want to listen to Andy after this, or I can take a screenshot with my phone and I can send it to myself, and then I can go back and get that later, and I won't lose where I saw it. And maybe I want to listen to Bitcoin price for Coinbase right below that. So this is the way to maximize your time and to work smarter rather than harder. Today's takeaways: keep your psychological capital. Remember that the public runs first to physical and then to the mining shares. And keep studying the blockchain space. It's going to change everything. You may or may not ever hold Bitcoin, but don't let that stop you from learning all about it. I guarantee you will not be disappointed, and at some point you will be in a position to profit mightily from it. And don't forget about balance in your life. This is a wonderful little comment that Pierre Burton wrote in his book, was Presaged the Klondike Gold Rush, and it tells us a lot about ourselves. Any one of us could be this old prospector. So don't shut out the important things in your life: family, friends, being honest. Don't put money above everything. Keep that balance, because at the end, as Doug Casey says, there are no luggage racks on a hearse. So make sure that you as you're doing well for yourself, try to do a lot of good for others, and don't just wait until you become a multimillionaire to do it. Do it along the way, no matter how large or small your ability to be in the market is. You can write to me if you'd like it at davids@lode.one, LODE.one. I can't give personal investment advice, but I can point you in some directions to do more research on your own. David Morgan has a letter that I've been an analyst with for almost 2 decades. It's an excellent letter. You can do that by the month if you want to try it out, or you can get a 1-year subscription. Go to themorganreport.com and see what you think. And also, he has a weekly free letter that you can get a hold of, and there's no charge for it. A lot of people that get on that letter eventually go to the Morgan Report itself, because they realize how much value it offers. And I'm not just saying that because I work with David Morgan. I fully believe it. I listen to everything he says when he's doing his updates, which he did a wonderful one last night. And I've learned a lot from it. And I'm a more successful trader because of what I've learned from David and several other people in this field that I think are first among equals. And thank you so very much for being here today. I think I've hit about the right time. I don't know if there are any opportunities for Q&A. If there is, I'll certainly stay around.
David, we are a little over, but we can answer one question if that's okay with you.
Okay, very good. I'll take it.
Okay. Wayne would like to know, do you have a personal percentage that you believe should be used in silver and gold and a percentage in precious metal stocks during these volatile times?
Yes and no. I think to come up with a specific percentage, because it's different for people, is really hard to do. I think what's critical is not to have so much physical silver, assuming you want to be in the miners at all. There are people that have no mining stocks. They don't have an account, but they have physical silver. It's in the hole in the ground. It's in the refrigerator. It's in the bank, whatever. That's fine. But if you want to take the next level of risk and potential reward, then you have an investment stock account, in which case you don't want to have so much physical that you don't have money for that, but you want to have enough physical so that it does ensure a portion of your own wealth, which gold has done for 20 years. It has beaten the S&P for 20 years now, and it's taken up for all the inflation we've had, and it will continue to be a tremendous investment resource for insurance. And when the price continues to go up, which it has, from 275, where I bought my daughter a Krugerrand in 2000 for her graduation, to 1800 now, I'd say it's kept up pretty well. So you have to be comfortable with it. And that's how I would answer that question. I'd love to be specific, but everybody's varies in their emotional ability to handle things and the amount that they have and their risk tolerance. So it's really, really difficult, but I hope that explanation helps you a little bit.
Yeah, that's a great answer. Thank you, David. Well, that puts us right at time. We do have another presentation starting in 2 minutes, but we want to thank you so much for joining us today and sharing your insights with our attendees.
It's a pleasure to be here, and I wish everyone the very best. Take care.
You as well, David. It's always a pleasure to have you here.